So this one's gonna be like channels and breakouts. So I'm kind of in that mode now. Still a little sick, but kind of in that mode because I just recorded the last one. But so this is like channels and breakouts, and honestly, I'm not new to this. I've kind of known about this shit for a while, but I have started like the last few weeks. I've used this a lot more than ever before in my trading career. So channels, breakouts. I like to use it mainly high time frame. So basically, a channel, you're drawing it. It has to be the same time frame. So we'll use high time frame for the first example. So blah blah blah. We have this channel. You can see how price is sort of respecting it. So now that we broke out of this channel, it's pretty high confluence that we're gonna go downtrend. This is more of a very quick example, I guess I would say. This is like there's things you can do to get ahead of it a little sooner, like using liquidity reads and stuff. Like I do, but like I'll really only use this for like for the most part, I really only use this for like additional take profits or like I'll actually put y'all on straight up how I use it. So I would have this marked out on another chart, and then I would have my actual liquidity and like my shorter chart right here. And basically the only reason for using this is like a little extra confluence. You can use like violating a channel, especially kind of like in that last video where it was manipulation, accumulation, distribution, all that stuff. Obviously that's out of order. But it's basically you just see like how so say we're two scenarios happen here. So one, which is playing out actively, we violate the channel. So now that we violated this upward channel, it obviously then we're thinking downtrend. But could you have seen a downtrend coming before? Yeah. We have this like medium time frame low that got swept already. So this is kind of just like a preview of what's about to come. So if we violate this channel, then we're most likely also going to take the low. So like you can kind of see here, seeing as we like violated the trend line, then one could make a strong argument that we're about to take this low, which we did. Or if we're ranging inside one of these channels, let me find a good example here. Honestly, our best bet's probably to go in replay mode because I don't want it to get like in the way. So we'll honestly just go right to here. So we're going right here, and then we're going right here. So, and you can kind of see as the incline, as like the incline of the uptrend kind of gets smaller and smaller, it's more likely for price to flip. Like if the trend was going like this, not very likely to flip. But then if we're going like this, how we are now, or like if we're going lower, we're most likely going to flip. So basically from this, the way I would really use this, I would never use this as a lone confluence first. Let's get that right out of the way. But what would I use this for? So we would see that like this 0.79% retracement, we'd have this, we'd have the order block. So we would wait for like a retracement. If we had like some sort of bearish bias here, we would basically just wait for that retracement to around that line. And then off of that, we would find like a micro BOS right here. You see the micro BOS. So then we'd enter a position for a short position, enter here, and this is like a very wishy-washy thing. Like I only use it in other confluence with my other confluences, but like, so say you have this here, and obviously where this trend line is going to change. Like the low is going to be higher over here than right here. But say market was moving down right here, or like say we waited till right here, then you could make a pretty good bet. I don't know if we have some type of fib retrace in here or not. I'll check quick. So yeah, I guess we do. So we have this 62% retrace right here. And then, so we have the 62% retrace. We have, nope, that's definitely not the right thing. God, this pisses me off not having my quick menu. I think it's right here, actually. Yeah. So then we have this 5-minute bearish OB. Boom, boom, we have all that. And then we also have wherever this trend line is. So pretty high confidence price is going to go to this point. It's not going to hit every time. I'm not going to fucking cap y'all and act like it is. But it's really just like a good read on where market is most likely going to go, I guess, is the best way to put it. Yeah. See, right there. That's, like, I'm not about to bullshit, y'all. This is, I don't want to say rare. I would say off the top of my head, this is probably like a 40% chance of like this happening. And that's why you combine it, because now that we have all this, I'm sure we retraced another higher time frame form of liquidity. Oh, please tell me this fib was from another example. Anyways, but yeah, it's kind of like applicable right there. And it's literally that simple. Like you can see by the example. We might have gotten a little ahead of ourselves, honestly. So I'll kind of explain it on all time frames now, but that was kind of just a what's it called when you go into a classroom? That's like the warm-up question, basically. That's the warm-up example. So, I know I don't really like the idea of just sitting in replay mode. I don't know why, but no. So let's get to a better example where price is actually like really strongly trending. Okay, so right here would probably be like pretty prime. And this would actually be pretty high confluence just off the tip of my tongue. Here it is. Start now. We'll go right here. Okay, so supply and demand line, kind of right there. So we draw like our sort of our little trend line. I don't use this on any short time frames, to be honest. For the most part, I pretty much just exclusively use this for medium time frame or higher to find an actual location that price is going to go to. So if we have that there, and you have to remember when you're using this, the lows create the highs create the lows. So if we go right here, this low created this high, and then this how do I want to put it? Then this low down here created this high, and then this low created this high. So blah blah blah, we have that. Okay, we honestly could go even higher time frame here. And okay, so quick tip. Why could we go high time frame here? Because this was the technical trend right here, and we broke through that trend. So that's medium time frame, we broke through it. So we're most likely gonna continue to higher time frame, which would be till about this level here. So I'll label this for y'all, because even I need it labeled, because otherwise I'll get lost. So if I'm getting lost on it, you guys probably are too, so you should probably be taking fucking notes and doing shit like that. Just my opinion. High time frame, medium time frame, we broke through that. And then this is once again medium time frame. Like I said, wouldn't really use this on short time frame personally, because short time frame is good for like breaks of structure, I would say. More like accurate moves, but because of how like broad of a concept this is, and like how much it's like a best fit line. If you've ever done like physics or any science for that matter, it's like over a lot of data, it's accurate enough. But when you get to like a little amount of data, if you have a fucking, I guess you all are getting another little mini lesson in here. But no, if you have this here, this here, and then this here. Best fit line is going to be like from here to here, and it doesn't go through a single point. So kind of just keep that in mind, I guess. But no. So you see we broke the mid time frame structure. So what are we most likely going to do? Probably going to listen to the high time frame structure. Is that a guarantee? Fuck no. Nothing's guaranteed in this shit. But now we can go into even higher time frame to source our liquidity. It should be... And that's another reason. The way I trade, I like to... It's called like one moving. So I use small time frame, medium time frame, micro structure time frame because I want it to be one move. So like where microstructure invalidates it. I don't want to fucking... If I'm trading, I want it to essentially be boom, maybe a small pullback and then instantly up. Like that's the trades I take. I don't take trades where it's like this, because for that to happen, you're trading high time frame, which don't do. Or, well, you can do it. I don't do it. And if you want to learn the way I've learned, then probably fucking do it. But no. We have 79% right here. We have 62% right here. So, boom, right here. I really hope I did this on my backup chart so I can just clear it all after. Oh, thank God, I think I did. Thank God I did. Because I would not want to manually delete all this. But anyways, blah, blah, blah. 62% right here. Nope. Higher number is going to be there. 62. And that, like, I don't even have to look at my fib. I know this shit, so probably trust me. I'm sure there's some sort of liquidity. If y'all don't believe me, then fucking suck it. That was kind of mean. I'm not gonna lie. But no. Literally, you see... all of these, I'm too lazy to do it right now, but order block cluster here, order block cluster here. This one's obviously higher confluence because there's more of it. So we're probably going to go more up towards that zone, but wait till a retrace into this 62, 79% area. There's also liquidity there, as you just saw. And then third confluence, and I would take a trade off of this amount of confluence here. Third confluence, we're breaking the medium time frame structure, so we're probably going to head up and respect the high time frame structure. So we'd enter... I don't know, do we have a break of structure yet? No. So this is a little bit higher time frame, so we wouldn't necessarily want to go onto this on a micro break of structure, especially because you have to keep in mind all of this is in confluence with each other. It all affects each other. So if we didn't retrace to some deep liquidity, so optimally you're going to want to retrace between this zone. It's okay to retrace to this zone if you're trading off of microstructure, but because we didn't have that deep of a retrace, we will not be trading off of microstructure here. So we're waiting for a small time frame move, so we're waiting for a break of structure to the upside. And that's why we're not doing that, because you wouldn't have gone, oh, yep, then you would have gone licked out. So that's why we're not trading microstructure off of this concept. So now we got a clear break of structure. So what are we doing? Okay, so it didn't pause on time, but you get the picture. Okay, so it didn't pause on time there either. So anyways, the realistic trade we were taking was off of this break of structure candle right here, candle closure. If you have balls of steel, you could go stop loss there. I'd probably go stop loss here in case we get an order block retrace. And then take profit. We're going to assume it's going to hit somewhere around here. Actual micro BOS is what confirms it. These lines are just lines until price actually reacts to them. Pretty important concept, pretty simple concept, but some people mess it up. But no. We'd probably, on a trade like this, we would enter $2,000 probably, and then if we get a retrace of this order block, we'd enter another $1,000. If we get it. Okay, so, bro, this makes me look like I'm talking out of my ass because it's fucking the delay, but we would have gotten out right about here on this micro BOS, which would have been 2,000 times that. It's like $4,000. And then as long as we don't invalidate trend, we would probably get back in. The only thing that would constitute us getting back in would be an order block retracement plus a micro BOS. We wouldn't get back in off of that. Because then kind of the psychology behind that. So we already made 5,000 for the day. So we're kind of tired from trading that much already. So then you got to think the only thing that would make it really worth it to trade that much is if we put $1,000 position in here. Fib would be right here. So we would close $500 there, which would be like 0.5 times like 4,500 there. Then we'd close the other 500 up here, which would be like 5,500. So that's like a $10,000 trade. So that's worth it to hop back on market, you know. But that trade is unexistent right now because we didn't get deep enough of a retrace to constitute it. But no, I mean, it works. And then this is another way I'll kind of use this shit. If we violate, since this is kind of like medium time frame, if we violate this trend line right here, then we, especially after if we just hit that $5,000 trade, if we go and violate this trend line, it's not like a big red flag to trade to bears. It's more of just like, if you're trading bullish, even if market is still bullish, kind of be careful. Because, like right there, that's not a signal necessarily to flip bias bearish. But it's like, the way I treat it, if we invalidate this trend line, and I already made money for the day, I'm pretty much just off market because we're violating, because you got to think, we're switching over to bearish trend, but we don't have an established bearish trend, so it's just enough to rule out bullish trades. And then in the same sense, it's not enough to rule in bearish trades. I don't know if I meant to say bullish. But no. So off of that, we're not really trading. And that's literally it. It's a pretty simple concept. There's no point in me, like, I kind of just cut right to examples because there's no point in me explaining this shit to y'all. You're smart. Especially if you watch the other videos I've posted. Like, there's no point in me explaining this. It's literally just connect highs to highs if it looks like they're following the same trend. So like right here, I typically like to do 3 or more consecutive moves. So highs to highs, and then, which this is a really good example here, highs to highs, and then lows to lows. It's literally that simple, dude. So, I mean, we could honestly start thinking a little bearish from that move there, but it's like, I'm not about to show you how to fucking draw this shit out because you don't need it. And I just did. It's that simple. Highs to highs, lows to lows, and then literally just make sure if you're marking out highs on like medium time frame like this, then mark out the lows the same way. And then high time frame, if you're marking out the highs, then make sure the lows you're marking out are also high time frame. And then small time frame, I only use small time frame for this. If, like in this example, I would only really use small time frame is if we have this medium time frame here, and then we're violating a small time frame trend. So like, right here. So like, you can see medium time frame, we want to do that. And then small time frame, we're doing this, which is we have this shit right here, which that in itself is a pretty decent sign that we're about to break it. But no, that's the only way I'd really use this for small time frame is if we're to use it for a break of structure. But let's use fucking common sense here. Structure was breaking anyways because we got a higher high, so it's not really necessary for small time frame. That's why I don't use it for small time frame, because why would you mark that out when you already know that this last high just got cut by this high, so we're going to go up. Like, there's no point in using this on small time frame. But yeah, good concept. Only use it for really medium time frame, high time frame. Make sure you're using other confluences with this shit, because if you could trade profitably just using this concept, then it's a simple fucking concept. Everyone would be rich if you could do that. So don't trade just off of that. So homework, I really want y'all to get this ingrained into your brain that this only works with other confluences. So 5 examples of a channel, whether it's bearish, bullish, doesn't matter. And then y'all are getting smart enough at this shit. We're gonna up the homework a little bit. So 5 examples of that, and then find pair it with your other confluences, so like a micro break of structure. I would say at least if you're gonna formulate 5 trade ideas using this channel concept, and then if you're gonna make a trade idea, which you are, then make sure you have at least find as many confluences as you can, but at least have an area where it makes sense for price to go. So whether that's an order block, a fair value gap, a Fibonacci retracement, like here, like a 79.62, or a 120% extension. And then also, it's literally that simple. Just find your trend lines, find a place that it makes sense for price to go to, then find it violating or respecting the trend line, followed by a micro break of structure, small time frame break of structure, however you want to trade it. That's about it.